Well, Steve, after a shaky start at the beginning of the week, it looks like stocks now appear to be heading in the right direction. Volumes also picking up nicely, so this bodes quite well for a better performance in the market this year than over last year. Hello, Steve.
Given
Steve,
how
can you hear us?
Yes, I can hear you now.
So looking for a better performance on the Nairobi Stock Exchange this year?
Yes, we're actually hoping for a beautiful outlook this year. With basically, despite the fact that our key fundamentals of the economy are a bit weak, we have the best opportunities and the best chances to actually come out completely of the doldrums, not to mention the East African community integration program that is actually underway, not to mention that government is actually looking forward to implement reforms in key sectors of the economy, political reforms that are needed to actually make sure that the business environment is good. We're looking at central bank coming up with policies that will be able to be pro-development in terms of our infrastructure, in terms of the telecommunications industry, and we're hoping that particular key stocks at the market that tend to have a significant impact, like Safaricom, Kenya Commercial Bank, and Equity, will continue being trailblazers. So the outlook is actually positive, and we're hoping that the key issue will be how the policies are made, because those are the tenterhooks we'll need to actually keep growing.
Well, you mentioned Safaricom, and that's a stock we've obviously been discussing this week. It went above 5 shillings yesterday, and just in the market reports I was reading, it said there's been high foreign demand coming from offshore investors and obviously local investors selling some of their stock to those foreigners. So Safaricom really one to watch out for this year.
Yes, one, because of its key fundamentals. You know, our market normally has been driven by human sentiment and emotions, but we analysts are hoping that this year we look at the technical analysis of companies and the fundamental aspects of them. And when you look at Safaricom, the technical analysis and fundamental issues about Safaricom, they're very good. And when you realize that with the integration of the East African community, a lot of businesses are actually putting their hopes on IT platforms to grow, IT platforms to actually increase their market share, and Safaricom being a key leader in terms of provision for these services. You know, given the fact that the management of Safaricom want to integrate the shares at the market, foreign investors are actually keen on it, because they want, if they can have a major stake in Safaricom, then definitely they'll control how the IT sector and the telecommunications industry in the country shapes up. So it's one of the key companies to look at.
How positive will the integration of the East African market be for financial services companies? And you mentioned Kenya Commercial Bank just a while ago. It recently emerged with its banking and mortgage subsidiary, Savings and Loans, and it's got big growth plans for the region, hasn't it?
Yes. In fact, Kenya Commercial Bank has one of the largest branch network in East Africa when you look at the banks in this country, then followed by probably Finabank, which has branches in Uganda and Rwanda. So we're looking at Kenya Commercial Bank to actually spearhead the rest of the banks in trooping to the rest of the region as the East African integration service is needed, because we believe that the integration of the financial services in East Africa will be one of the key platforms for growth. So when you merge financial services and the IT platform, we're looking at having a very beautiful outlook. These are the tenterhooks that most businesses are actually hoping that the government can have key policy that are pro-growth in East Africa.
Of course, the central bank's economic review shows that banks are still under pressure from underperforming loans at this stage. And of course, we know that the economy was in trouble last year. You're hoping for stronger growth this year. To what extent will these non-performing loans hold back progress in your banking sector this year?
Actually, the banking sector is at crossroads as we speak right now, because when you look towards the last quarter of last year, many businesses opted to go to the bond market to actually raise their capital, other than going for syndicated loans or going to loans from the banks. This is because it's easier to raise the money at the capital. At the bond market, with though the requirements are higher, but the returns are good. So we're hoping that banks this year can change their strategy, increase the pyramid of how they're going to get their customer deposits and things like that, and enhance their non-performing loans. Reduce at least by say 7%, because as long as they'll keep having pressure from central bank, we're going to have problems for businesses actually being able to acquire loans to fund their development.
Well, something we've been discussing with your colleagues in Nairobi this week is the 2010 Soccer World Cup here in South Africa and the positive spin-offs it can have for the Kenyan market as well. Which companies do you think are poised to benefit from that Soccer World Cup?
All of us in Kenya, whichever business you're in, we're actually hoping to benefit a lot from the World Cup 2010. But when you look, key companies you're looking at TPS Serena, which is a leading hospitality company in this country. We're looking at the Kenya Airways. We're looking at local tour companies that probably hoping to cash in on tourists will be flocking to see beautiful wonders in terms of tourist attractions. So the diverse of it is actually great. But we also, us in the finance sector, we're hoping to cash in terms of offering financial services. Kenya being one of the key emerging markets in East Africa, and especially in Africa, we're hoping that as people troop into South Africa to see the World Cup and everything, they can have a moment or two to spend in terms of looking at the emerging markets, IT platforms, the telecommunication industry, natural resources, and beautiful commodities like tea, coffee. So basically, they should be research companies to improve the research method, so we can have a lot of investment information out there by the time World Cup actually starts.
Steve, just given the growth outlook for Kenya this year, I know the World Bank's looking for growth of around 3%. Of course, we had the third quarter last year contraction in the economy. We haven't got the fourth quarter figures out yet. What sort of growth would you expect to see on the stock market this year, given last year's 5% contraction?
Given the research that we were able to conduct towards the end of last quarter, we're looking at a growth prospect of about 2.7 to 3.1 this year. This can actually give or take an error margin of 0.4 because of, depending on what the government will actually be able to implement the stimulus package, that's one. And then the kind of policies that the private sector and the government will actually come up with and implement. These are the key issues to look at to enable us be able to at least sustain a growth of between 2.4 to 3.1.